Hello and welcome to a new expiry video. Today is 17th November and I had a profitable expiry. As you can see, I was busy in the morning, so I didn't take a trade. But if anybody wanted to take a trade, they most likely would have taken a trade at the start day itself because it opened near a very strong uh, demand zone. That is, you can see from here, support, a lot of buying, a lot of. So as soon as you started seeing any buy from here, you could have entered one with the stop loss of the support previous and target for gap to be filled, and that could have been one of your trades. The second trade could be a reversal trade from the top. So it is a trend to a lower time frame. So this trend line is indicating the current trend line indicates the weakness in the current trend has happened, and then you can buy on the pullback of that trade, right? So that would be either in the fib of 0.5 to 0.6. How clearly this come here, and I'll show you how this works perfectly on other on every setup as well in a range bound market. This is my strategy for only range bound. You enter somewhere here. As soon as it enters the zone, you keep the stop loss for the low of the day, and you keep your targets based on this, right? So my target would be somewhere of the 1:2 minimum. So around that would be my target as well, 1:2. So this would be another trade you could take. But I was busy. I didn't want to take this trade. So when I came back at around after lunch at around 1:30, I looked at this and I basically waited for my setup to be formed again. Same simple logic like last time. Draw a trend line, wait for it to break, and then you take a trade on the pullback. Now it's very important to understand the discipline of this kind of trade, right? So again, you can see this is the fibs for this trade, right? And I entered my 18,400 in the money put right here at 1835 rupees. So this is just nice 1835 rupees I entered here. It is right at the edge of this. As you can go and check it yourself. So I was in profit right here, and because it's in the money right now, it's a very nice thing to as a called hold as well because you know you're not going to go to zero very quickly. The time is not going to act very much against you, and it is proven because if you see later at this point, right, I had a lot of fear, but because of my very good entry, the fear was less. If I had entered here instead, then I had to take care of this much fear. But because my entry was so good here, my fear was less, and my logic is very simple. It cannot go above. If it goes above this, then I need to cut the trade. Very simple. My risk for the trade was also only 10 points, and my target for the day is 20. It is very simple as that as well. So if you observe 18.35, 10 points minimum, if you cut out, it's 8.35. Now you can go and check the chart, right? You can go and check the charts and you'll find out that it made a low of around 18.7. So it didn't trigger my stop loss. But I took precautions before because you need to understand that adjustment is also key. So now I knew that the overall trend was negative because there's been two double tops, a 10 line break, and it's a range volatile. It's already gone up. Now it has to go down to the range bottom, right? So I had to adjust my position. To do that, I bought another put, sorry, right around here at 12 rupees or 11 rupees, around that area. And what happened after that? I kept my stop loss at the same place, right? 18.35. Now I'll be risking around 15 points in total. That is the price of adjustments. 5 points is what I think is reasonable because I'll tell you what happened. As soon as this candle happened, then this candle, I was able to have as my average went down to 15.45, and as soon as this candle happened, I was in profit. immediately. Now, because of that, I sold one of my lots back at 15.45 to cap my risk. I don't want to risk more than 10 points willingly. So as soon as 15.45 came, I put an SL there, and this green candle took it out, right? 15.45 SL taken. Now, if I put my risk of 10 points from 15.45, I get more breathing room, and my stop loss comes around here and at 5.45, right? So that was nice. That's how one of my adjustments works in this area. And after that, you can see there was clear movement. I was waiting for 35.45, and because the what's it called, premiums are moving too slowly and I couldn't predict this kind of huge movement. As soon as I saw a momentum and an opportunity, I took my 1:2 and I exited the trade. If I was taking more than one lot, then I would have gone for lower, more targets, like one target here, one target here, and then this would be like I knew this is a buy zone, right? Because you can see how many times price has reacted off this zone, and that is why this buy zone I would just I've already drawn it and kept, but if it had broken this support, then my next target would have been this. Otherwise, my target, if I had only two lots, I would have finished it off there. You can't aim to take every point from the market, because if let's say it went down till here, it didn't reach your target, but this one green candle here that almost bought back till the previous support would have scared you and you would have exited any. And if you check the premiums, you would have lost money if you had waited. So you have to sell off in a red candle. You have to buy. That's the key. Buy if you're buying a put, you have to buy in the green candle and try and sell off in the momentum candle. But if you stick to this, how many of trades you take, 1:2 ratio, you'll always be profitable. But you need to have a fixed strategy. This is my range bound strategy. You can see everywhere. Not mine. I learned it from my mentor, and that's how my trading works. Thank you. And for those people who wonder why I only do one lot, it's because I'm still learning and most of my money is in stock. I do swing trades to get some money and try to build a portfolio. Options, I'm learning with one lot till I get comfortable, and after that, I will increase capital whenever I want. Thank you. Have a nice day.